Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about USDCAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment, clearly, we have a market which is stuck in a range. We have the bottom of the range here and the top of the range here. The bottom has already acted as support in multiple occasions, every single time being respected and the market rejecting it to the upside. And at the same time, the top has already been tested as well multiple times and respected as resistance every time. However, we also have some intermediate structure levels. One of them is exactly the zone that the market is currently testing. So this intermediate previous resistance from which this red candle was created, which now that the market has broken it to the upside, is turned support here. So the market is currently testing previous monthly resistance turned support inside of this range. So there is a possibility to go for another test of the high of the range, rejecting this intermediate support. So from a monthly perspective, there is a possibility for some short-term bullish price action for the market to go and test the top of the range. Let's drop down on the weekly time frame and see what we have. From a weekly standpoint, there are two main important things to keep in mind. The first one is that we do have structure support at this zone. This area, in fact, was already acting as previous supply and resistance here, preceding all these rejections to the downside. Then the market with this impulse broke above the zone. So all the previous resistance was turned support at this area. The market tested it already for multiple weeks in a row and currently seems like finally is starting to reject it to the upside. And we can also notice the second thing is that this area is also confluence of support, because from a pattern standpoint, since we have this impulse and correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have the 0.618 Fibonacci retracement in perfect confluence with this support, therefore creating a confluence of support because we have both the Fibonacci level and the horizontal structure both lining up in the same area of price. And since we have confluence of support, this increases the probabilities of a potential rejection to the upside away from this area. Now, let's drop down on the daily time frame and see what we have. Well, from a daily standpoint, the situation is quite clear as well. But before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing precisely for the CAD. Now, as usual, the first thing that we have to remember is that every currency on the spot is traded against the USD. So if we are looking at the data for the CAD, actually we're looking at CAD USD. So since we're analyzing USD CAD, we have to simply reverse everything. So if institutions are shorting the CAD, they are shorting CAD USD, meaning that they're actually longing USD CAD, obviously. And in fact, we can see that that is exactly what is currently happening, with net positions getting decreased from minus 863 all the way down to minus 86.5K. And we can notice that this means that actually institutions are increasing their shorts and decreasing their longs on the CAD, meaning that they're actually longing USD CAD, increasing their longs on USD CAD and decreasing their shorts. In fact, shorts on the CAD went from 37K all the way up to 123K, and longs got decreased from 45K all the way down to 37K. So institutions clearly are moving back to the bullish side for USD CAD, therefore making it stronger. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now, back to the analysis. Well, as we were saying here on the daily, this structure is quite clear. Even though the monthly and weekly are bullish, on the daily, until the market will remain below this high, it can easily be rejected to the downside because this area is currently still resistance, and every single time the market is testing it and rejecting it to the downside. And even if now the market goes for another test of the zone, until the market remains from a daily closing perspective below this level, it can easily be rejected to the downside. However, if the market manages to break above this zone, that is where things get interesting, because at that point, this previous resistance would become support. And if we actually get a break above this resistance on the retest of the previous resistance turn support, that is where there is very high probability of getting more institutional longing of USDCAD, which at that point would further increase the probabilities of a potential rejection to the upside away from this area. So if we get this break and retest, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this area. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below and I will see you in my next video.